Is Target stock still a good investment in 2025, or is the price already too high for future gains? In just a few minutes, we'll walk you through Target's short and long-term potential using simple explanations and powerful data. Let's find out if it deserves a spot in your portfolio. Target is one of the largest retailers in the US, offering a mix of groceries, apparel, home goods, and more. They operate over 1,900 stores and control several privately held label brands like Good & Gather and Cat & Jack. Their US market is around 2% in general merchandise, competing with giants like Walmart and Amazon. On the positive side, Target has a loyal customer base, strong branding, and steady sales, but there are risks too. Slowing revenue growth, rising costs, competition from online players, and tighter profit margins. When we compare how Target has performed over time versus the overall market, we use something called the Sharpe Ratio. It tells us how much return you get from each unit of risk, based on historical prices. Since 2005, Target's net return was about 4.6%, but with high price swings, volatility of 31.6%. Its Sharpe ratio was just 0.3. The S&P 500, by comparison, had a Sharpe of 28.4, much more return for the risk taken. For short-term investors, we used a model called Monte Carlo, which simulates 1,000 possible price outcomes over the next year. This gives us a most likely target price around $99. So in the short term, Target shows limited upside and slightly more downside potential. Now for long-term investors, we use two valuation models. The first, based on earnings growth and valuations history, gives us a fair value of $96. The second, based on expected cash flow, landed around $88. Target has faced flat revenue, thinner profit margins, and rising costs, making long-term upside unlikely unless major improvements happen. From a technical perspective, Target stock is in a downtrend. The price is below all major moving averages, and the MACD, a trend indicator, is pointing downward. The RSI, which tells us if a stock is overbought or oversold, is at 38, which is getting close to oversold territory. That means a possible opportunity to buy, especially if the price drops to the 70s, where long-term support lies. So what's the verdict? The current price is around $96. The one-year forecast is around $99, and the long-term value is around $96. That makes Target fair valued for long-term investors, meaning you might not see big capital gains. For short-term traders, there's limited upside unless the price dips to the 70s, which could be a better entry point. Still, with a 2.5% average dividend yield, Target may be a solid hold position in a dividend-focused portfolio. Like and subscribe for more beginner-friendly breakdowns, and check the video description for full sources and glossary.